What is up, everyone? Welcome back to the Bullwinkle Blueprint. Hope you're all having an incredible day. Make sure you're subscribed and following, folks, because these markets are about to get insane. Because look, today, the XRP supply shock we've been warning you about, we've been talking about, it's not coming. It just started. ETF filings, liquidity crunches, global yield spikes, and the single biggest macro policy shift in 3 years are all colliding. And every number, it points in the same direction. Extreme, folks. Conditions are about to go down. If you're not paying attention right now, guess what? You are already behind, and we're going to start right here. Spot XRP ETF proposal are increasing while other crypto issuers remain on the sidelines due to regulatory clarity and institutional demand. Looks like that Ripple versus SEC lawsuit actually worked out in our favor now, didn't it? And don't forget, 21 shares ETF is going live today as well. My reaction to this, love it. Love to see it, folks. This is exactly what we expected once the dam cracked. But the speed of all of it, how it is all unfolding, and how much money is actually coming in per day. Remember, as of right now, we're averaging 45 million per day across 4 different ETFs. But that speed, it's surprising. I'm gonna be honest with you. So here's what this actually means, right? Issuers, they don't file unless they think approval odds are high and the inflows are going to be real. So the fact that XRP proposals are popping up while other digital assets stall, it tells you that the institutions see one thing: superior regulatory clarity and a massive demand curve, folks. Things are starting to work out, and XRP favors chances here now, aren't they? It feels good. We're finally on the right side of things. Why does this all matter? It's simple. Look, ETF filings, they don't create hype. They don't front run money. Issuers smell a vacuum. They see the liquidity profile. They see the suppressed market cap, and they are positioning themselves before the crowd. Narratively, this is the spark. The supply shock starts with access, and ETFs are the access point that Wall Street cannot ignore, which gets us over to this Canary Capital. They say its XRP ETF has now surpassed the combined volume of all other XRP ETFs. That's absolutely insane. Remember, Canary is just a small little niche company over there. But this freaking hits different. This is what happens when someone moves early in a market that isn't awake yet. Canary's XRPC, that's the ticker. They are doing more volume than every competitor combined. Because when institutional demand wakes up, and it's going to wake up, it flows to whoever is already open for business. First mover advantage, it isn't a theory, folks. It's a funnel. And the narrative here is even bigger. If one issuer is already accelerating, flows aren't waiting for regulatory perfection. They're moving now. That means retail still has no idea what's brewing under the surface. This is the second stage of a supply shock. Not enough product, too many buyers, and the market hasn't even priced on the starting gun. Let's do a quick market check before we keep on going. Bitcoin's coming in at $86,288. Ethereum coming in at $2,838. XRP looks like it's going to crack back under $2, coming in at $2.03. Total cryptocurrency market cap 3.11 trillion. Look, it is what it is for the time being, and I know people want to know how come prices aren't going to go up. We'll make a video, we'll cover that. But look, when you buy OTC, it does not affect price. What it does is it removes supply from the over-the-counter. So when over-the-counter runs out, they need to come to the market. And when they come to the market, that is when the price goes up. And folks, don't forget, if you don't get all your Ripple and XRP news, get on over to xrprightnow.com and check it out. 15 to 20 articles per day. You love to see it. You love to see it. And from my partner, I Trust Capital, folks, look, if you don't have the premium custody account, now's the time to do it, especially if you're going to be holding your crypto for a foreseeable future. This is a closed loop system. Your crypto transactions stay protected. no external wallets, no hidden risk, just a secure, trusted way to buy, sell, and custody your assets with confidence. You get institutional grade custody, no monthly charge, award winning US support, and a low cost for when you want to sell. Think about that. And remember, iTrust does not hold your crypto. So if iTrust goes away, your crypto's still good because Coinbase Institution, Fidelity, and Fireblocks, they are the ones who actually custodian your cryptocurrency. So if you're worried, I'm going to click on a bad link, I don't know if I should connect to this, you can't get hacked over there because the money can only exit into your bank account. It cannot be moved around. Once it's in there, it's in there. Your XRP sits there until you cash it out. Bada beam, bada boom. Now let's get to this. The real reason behind the $200 billion market dump happened right when I went to bed last night. This one's important. Massive liquidations don't happen in a vacuum. Remember that. They happen when macro and positioning collide. Here's the real breakdown about this that no one's talking to, and I'll blow up these images so you can see them. So while everyone's screaming fake crash or, market manipulation, the deeper dive was simple. Liquidity. Liquidity pulled back fast. It wasn't fear. It was forced rotation. Think of it like a pressure valve releasing right before a big directional move. Markets dump when they have to, not when they want to, folks. And why does this matter for XRP? It's very simple. Because supply shocks don't happen in calm markets. They happen right after volatility wipes out weak hands. The $200 billion flush, well, that cleared the runway, which is going to get us over to this. Japan just broke a 27-year record. 20-year yields at 2.89%. 10-year are now near a 1.84%. The yen is ripping higher, and your risk assets are dumping. You want to know what this is? This is Japan telling the world liquidity is coming home, baby. When the yen strengthens, global markets feel it first because Japanese capital is one of the biggest liquidity providers on earth. Don't believe it? Go look it up. Every tick up in yields, it pulls money out of foreign risk and back into domestic bonds. And that's exactly what triggered part of the global drawdown. Let's get into your deeper narrative, okay? Because this goes deep in what we see going on out there. Crypto is the sensitive gauge. It reacts before equities, right? Crypto reacts before bonds, and it reacts before commodities. So when you have your Japanese yield spikes, crypto instantly reprice future liquidity, not its present conditions. This sets the backdrop, a world where capital is rotating, right? Your volatility is going to be rising, and your underlying liquidity pressure, it is peaking, folks, which moves us to this. The largest liquidity drain in modern history ends today. We're talking QT. It's over as of December 1st. That's right now. This is the big one. My reaction to all this, I'll let you know. I got a lot to say on it. This is the type of macro event people don't appreciate until months later. And by then, guess what? It is too late. Let me break it down cleanly for you. For 30 straight months, the Fed vacuumed $2+ trillion out of the system. 2+ trillion, folks. Your balance sheet went from 9 trillion to 6.6 trillion. The most aggressive tightening since Volcker, and it ended today. No crisis, no panic, just a calculated pivot. The Fed sees reserves back as an ample level, meaning they think that the system is stable enough to stop draining liquidity. And once QT stops, your direction reverses. The December 9th FOMC, 8 days away, that cut's essentially priced in. Bond yields lose their forced sellers. Treasury funding eases, dollar strength moderates, risk assets get a massive headwind removed. This is the moment that the markets have been waiting for since 2022. The shift from liquidity extraction to equilibrium. And for XRP, a liquidity change is about to happen. during an ETF expansion cycle, this is the exact formula for a parabolic supply crunch. The macro backdrop, folks, I don't know if you see it, but it just clicked into alignment. When you connect every single piece here, and we talk about ETF inflows, right? Your macro rotation, QT ending, Japan's yield shock, and a suppressed XRP supply, well, you realize something's huge. The market structure is shifting faster than analysts can update their models. And assets that were starved for liquidity are suddenly about to be flooded with it. The supply shock, it's not a prediction. It's already happening. And most people, guess what? They won't recognize it until the chart has already gone vertical. Thanks for watching, folks. Make sure you hit that thumbs up. Stay tuned because I'll see you a little bit later this afternoon. I got an amazing video lined up for you, 3:30 p.m. Eastern Standard Time. I'll see you all there.